Zacks Know Your Options, a weekly overview of unique option strategies and ideas designed to help you beat the market no matter which direction it's going. We're going to turn our attention to put options writing once again now with Kevin Matras, who is our options expert here at Zacks.com. And, you know, the last time we talked about put option writing, you explained how it worked by illustrating going over a trade of yours.
Right.
Are we going to do the same thing?
Yeah, we're going to do the same thing.
We're going to rerun that piece
right.
for you.
No, the last time we talked about put option writing, I illustrated a trade that I had done, and it really was a picture-perfect trade. It couldn't have worked out any better, and I thought that it was a great way to illustrate how put option writing really works. Mm-hmm. At the end of that piece, I said that I had put on another trade that was very similar. I was writing puts. It actually was a ratio spread that I wrote, but I wrote puts and I wrote a call. Nonetheless, I said that I was going to come back and review how that trade went. So here we are. We're going to review how that trade went.
Because he always keeps his promise.
Here we go.
All right, lay it on us.
All right, first off, this is a good example to use because, like I said, the first one was picture perfect. This one wasn't picture perfect. Not every single trade is going to go exactly according to plan, but I think the illustration that we're going to go over really shows that you can still make money even if things don't work out perfectly.
Okay.
So let me see if I can set up this trade, all right? What I did was I wrote a ratio spread on Apple Computer, ticker symbol is AAPL,
right.
And I did this trade on May 13th. Now, at that time, Apple was trading at around 122-ish, all right, 122.20, 122.50, somewhere around that area.
All right.
So here was the trade. I wrote 1 June 120 put for a premium of 515, which means 515 bucks. Mm-hmm. I also wrote 1 June 115 put for a premium of 410, which means 410 bucks. And I also wrote 1 June 130 call for a premium of 420 or $420. If you were to look at the combined value of those written options, I stood to collect roughly $1,345 on the trade if everything went correctly. In other words, if at expiration the price of Apple stayed between 120 and 130. Mm-hmm. And I only had to see this happen within, I think, maybe a 4 or 5 week period. As it turns out, the day that I put that trade on, that really was the low that Apple had seen. I think the low later on that day was right around 119.38, and within a day or so it proceeded to move higher. So what's interesting about this trade is those puts were never in jeopardy. In fact, those puts started to make money right from the start within like a day or so. However, the written call, on the other hand, that started to work against me almost as quickly as the price of Apple started to rally. So about 2 weeks later, it was like May 27th, Apple was trading at around 133, more than $10 higher from where it was when I had put the trade on. Puts were doing great, but my call option was now valued at $790. Don't forget, I wrote that option at $420. As the price were to go down or at least stay where it was, right, not get above 130, that option I was hoping was going to decrease in value. But with the price of Apple going higher, now that call was increasing in value. That was working against me. That option was now valued at $790, which means I was sitting with an open loss on that position of around 370 bucks. So I looked at Apple. I saw it was heading higher. I decided to get out of that 130 call and take care of my risk right there. So I bought that call back for 790 bucks, which means I took a $370 loss on that call.
Yep.
But here's how the trade turned out, because don't forget I was making money on those puts. At expiration, which was June 19th, several weeks after that, Apple was trading at 139.48, well above that 120 level. So those put options that I wrote, those had expired worthless, which means I pocketed all of the premium I had been expecting to collect. So here's how the trade works out. Let me go to the next slide. That June 120 put that I wrote for a premium of 515, I collected $515. That June 115 put that I wrote for a premium of $410, I collected $410. On that June 130 call, though, that I wrote it for $420, but I had to buy it back for $790, which means I lost $370 on that trade. But my net gain, after everything was said and done, was $555 sans my commissions and fees, and I thought that was a very easy and painless trade for a quick 4 or 5 weeks of work.
So what you've really illustrated for us is that because things don't always work out perfectly, if you pay attention to what's going on, you can still make some money.
Absolutely. If you had put multiple positions on, you're talking about a much larger profit as well. But I got to tell you, these kinds of trades for me, these writing these options and all of this stuff, I would say these are some of the easiest trades to put on. And for me, I think these are some of the most stress-free trades that I'm able to make. But again, I think that, being able to just pay attention to what's happening in the market, that is how you can profit pretty much no matter what's happening out there.
All right. Want to dissect anything more for us this time?
This is going to be a regular thing. I'm going to come back here and keep on reviewing these different kinds of trades. And I think it's going to be interesting, too, because we're going to go over things that are picture perfect. We're going to go things that don't always go perfectly according to plan, like this one, showing how you can benefit no matter what. But we're also going to go over some losers, because I do have losers like anybody else. But dissecting your losers is just as important, because you can then see where you went wrong and you can learn from those mistakes. So we'll be doing this again probably in another couple of weeks, because I got lots of other trades that we can go over.
When you go through the losers, are you going to put an L on it?
Yeah, that's what I'll do. I'll make sure.
so we all know what's going on?
We'll know how the piece is going to start off, right?
All right. More information from Kevin Matras, our options guru here, in order to help you know your options. With Kevin, I'm Terry Ruffalo.